Hey traders, John Howell here. Today I want to share something with you that really helps me with my trading, and it's finding good areas for entry, but also using this technique or this tool really helps me gauge on when the market may be overstretched too much and it may be a really bad time to be entering in the markets. And I really want to share that with you because me and my private clients recently got out of a trade this morning for a really nice profit, and I was saying the reason why I'm getting out is because of this one technique, and I want to share that with you, exactly what I shared with my private clients, and I want to share that with you. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Now, one of the things that I really learned over my time in the markets, right, is that there's times when the market becomes too overstretched and it either needs a breather where it's likely to go sideways for just a bit of a breather, or we get a bit of a pullback in the markets. And you'll see this a lot, especially when you'll notice this a lot, right? Especially when the market takes off too much too quickly, it generally that's not sustainable in the markets, and that's done too much of a move, and therefore the market just needs to sort of relax. And what actually happened today is that me and my private clients got out of two different trades. I was personally in GoPro, and we got out of GoPro, and that was actually for a loss. So, but I was still okay with that. It wasn't actually too bad of a loss. And then we also got out of Adobe, and now Adobe, me and my private clients, and or at least some of my private clients anyway, got out of this one, and today I actually exited, and I got just a bit over 150% return on this one with options. So beautiful trade. I think I had a 50% loss on GoPro, so it was a 50% loss, and then also had a 150% profit on Adobe. So therefore, my net position is, my account is up, or my position is up over 100% when you're talking about the net of the closed trades today for me personally. I still have trades open right now. They're doing really well, but these are the two different trades I closed out today. And firstly, as you can see, right, as long as I have the same risk on every single trade, you can see how that my account is up net. So if I have, call it 10% risk, or 5% risk on my account, or say 10% risk on my account, we can see how much of growth of my account and so on and so forth. But the purpose of me saying this is, firstly, I'm so grateful for this amazing trade that me and my private clients took, and this trade here gave us 150% return. But one of the reasons why I personally got out of it today, and I did it in front of my private clients, is one of the reasons why I did that was because of this one thing called the market is overstretched, and it's actually a pretty good time to take profits. I'm not sure if it's going to continue up or not, but right now is actually a pretty good time to take profits. And so what is that? And that is looking at the markets, with this moving average on the screen. Notice how this is a 52 just simple moving average. If I go to edit this, you can see how it's just a simple moving average, and it's just 52, and that's it. Why 52? It's just a moving average that I learned from one of my earlier mentors back probably 15 years ago now, and I actually learned this from him personally, which makes my trading so successful because I actually use this as a gauge to finding good entry points, and also helps me that when the market does run on a lot, I know when I may be looking for good exit points as well too. So that's the reason why for me personally, I'm looking for my trading pattern closer to the moving average, because look what happens as soon as we get too far away from it. Look what ends up happening. We end up coming back to it. Even back here last year on the vid situation, right, the cough situation. Look what happened. We end up coming back to the 52. Right, we had a bit of a move up, and then we end up going sideways, and the 52 caught up. So that's why I said before, we never know whether the market is going to continue is likely to continue up, but there's a high probability we're likely to go sideways to let the 52 catch up, or we're likely to get some sort of a pullback. You can see here, right, we got too far away, and then we got a bit of a pullback. And you'll notice this here. Notice how we don't get too far away from it. And as soon as we start to get too far away from it, we know, and if you look at this on any stock, you'll notice that, okay, there's a certain distance when this particular stock gets this certain distance away from the moving average, it's probably a good time to take it because we generally get pullbacks and so on and so forth. And so we just remember, guys, we're looking at probability here, right? And again, my option was over 150% return. So why wouldn't I be happy with that in just a few weeks time frame? So that, along with what I'm sharing with you here, and I was saying to my private clients that firstly, we've had a very nice move up here with our trade. We're at a beautiful profit, and also secondly, we're roughly at the same distance from here to here. Is roughly the same distance for the maximum distance from there to there, from there to there, and also from there to there. It's roughly the same distance. And over the last 2 years, every time the market has gotten this far away from the moving average, we've either paused for a few weeks to a month to let the moving average catch up. So when the market does this, and then the moving average does this, and then over the course of a few weeks, the moving average catch up, and then we get ready to get going again. So I said to him, based on where we're at right now, and we're so overstretched right now, especially on this particular stock on Adobe, that I am just happy to take my profits and close it down. I got out of GoPro for a 50% loss. I got out of this one for 150% profit. That's going to give my net closed positions a very nice growth in my account just for the last few weeks. And so happy days for me. My account's still growing and I'm still making really, really, really just tremendous income from trading, all based on what I just said there. So I hope this really helps you out today, guys. If you're ever looking at your particular markets, bring up, and it doesn't have to be 52 exactly. Like why 52? It could be the 50 moving average. It could be a 60 moving average, right? Like it doesn't have to be exactly 52. Again, it's just from one of my earlier mentors, and I've always liked it. So I've always just used the 52. And again, it's not really the number. You could use 55 if you want. You could use 60, but whenever I like to use the moving average as a gauge of seeing where is momentum. So I like to use the moving average for these types of different reasons. So one, I like to see, are we overbought? Are we overbought? Or are we oversold? You can use those from indicators, but the best thing for me, I realize, is that bring up a 52 moving average, and I can see there in the past, these have been the maximum distances away from the markets until we have gotten some sort of a pullback or a rest, or a bit of at least a resting phase. And from here to here, same sort of thing. So overbought, oversold levels. Also, secondly, it helps me with entry points, because my best particular trades, like for example, I got into Adobe here. Why? Because I won't go into all the rules there, but it was, look where the 52 was, right there. I was right near the 52, right? And then we moved up. We went from not overbought, not overstretched, in neutral territory, to then making a big move. And so one of the reasons why I love having my pattern that I trade right near the 52, because it gives a bit of a neutral. We're not overbought, we're not oversold, we're in neutral territory. So it helps me with the entry points. And number three, it also gives me a good gauge of momentum as well too, right? So you'll notice how the market actually sometimes trends up and then trends down and then trends up. And you'll notice how, like, even when I entered Adobe right here, notice what the moving averages were. Notice how we actually were starting to trend up like so, right? So we're starting to get this moving average starting. You can see it was actually starting to trend up, which was starting to get momentum was behind me. As you can see, like that through there, right? So there's a couple of different things that I like to use the moving average one is the distance, how far away is this particular stock? Because even if I get some sort of a short-term play with my system and I get it up here, but it's too far away, now you're questioning, right? Now you're saying, oh, I don't know about that. I think by looking at this particular stock, it looks like it's too far away. It's not giving me a good probability of this actually, doing really, really, really well for me. So there's the three main points that I use. This one moving average for. It's the distance away from it. Secondly, I like to take trades when it's close to it because it's like a neutral. And also, thirdly, it gives me a good gauge if there's actually a bit of momentum in this particular market. You can see here we had a strong momentum up, and then we had no momentum for a while. It flattened out a bit, and then now we're actually starting to increase momentum as well. So I hope this helps you out today, guys, and I'll speak to you real soon. Hey traders, I'm giving away 100% free access to my brand new Breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.